Wow, what a difficult year it's been so far, both in the equity markets and in the bond markets. I know when you look at your statements or pull your accounts up online, it's a very difficult time. However, I want to share with you several ideas based on history that will hopefully give you a little bit more confidence and reassurance that things are going to be okay. So let me share with you three things that history has told us about times like this. Number one, recessions are historically very short, on average about 11 months, if we went back to 1945. Now, I don't know if we're in a recession or if we're going into one or if we're even going to have one. And that's a curious thing. There's actually a government bureau that determines when recessions begin and end. However, they don't announce the beginning of the recession until we're historically about halfway through the recession. The point being is, recessions are brief, and you won't know you're in one officially until you're on the backside of the recession. Number two is, remember that the stock market historically is a leading indicator. What do we mean by that? Well, the market is always looking into the future and trying to determine, are things getting better or worse? So we can say, well, why is the market down so much this year? Well, perhaps the market has been looking ahead and saying, yeah, we may be going into recession, and therefore forcing prices down. However, remember this, when things are looking the bleakest in the economy, we may start to see the market go up because the market again is looking to the recovery that is going to come or has come every time in the past. Number three, when we invest in the stock market, remember, you're not buying a market. You are investing in high quality companies. These are companies you and I utilize every day. They're products and services, whether it be insurance companies or banks or grocery stores or healthcare companies. We're not going to quit living our lives and quit using their products just because we're in a recession. These are high quality companies, well run, that provide excellent products and services that we're going to continue to use. Those are what you're investing in, not a market of stocks. So hopefully by knowing these three things, one, recessions typically are brief. You won't know you're in one until it's almost over. Two, the stock market is a leading indicator that it will already start to go up before the recession ends. And three, you're investing in high quality companies, hopefully within your portfolio, that we will continue to utilize as individuals, families, and businesses. Hopefully by knowing these things, you'll feel a little bit more confident and reassured that things are going to be okay.